Investment decisions. The investment decision relates to how the firm's funds are invested in different assets. A firm's resources are very limited as compared to its uses. Therefore, a firm has to choose where to invest these resources so that they are able to earn the highest possible return for their investors. Factors affecting investment decision. There are different factors to be considered before arriving at an investment decision. We can classify these into three major heads and can be discussed below. Cash flows of the project. An investment decision of a company depends on its cash flow. These cash flows are in the form of a series of cash receipts and payments over the life of an investment. The amount of these cash flows should be carefully analyzed before considering a capital budgeting decision. The rate of return. Rate of return is the amount of return expected from a specific investment. The most important factor to be considered in an investment decision is the rate of return. If the expected return from the investment is not satisfactory, it is not wise to go ahead with such investment plan. These calculations are based on the expected returns from each proposal and the assessment of the risk involved. The investment criteria involved. The decision to invest in a particular project involves a number of calculations regarding the amount of investment, interest rate, cash flows, and rate of return. There are different techniques to evaluate investment proposals which are known as capital budgeting techniques. These techniques are applied to each proposal before selecting a particular project.
For more such videos on all subjects, practice questions, and a lot more, download iPrep and learn unlimited.